Let's talk about Bitcoin. So Bitcoin is millennial gold. The millennials have lost faith in the traditional banking system, and so ignore cryptocurrency and Bitcoin at your peril. So this is a graph of how Bitcoin has performed over the last year. Pretty spicy. And for those of you that follow me on LinkedIn, back in late October, I said, I'm not being super positive, at least publicly, about Bitcoin, but I think it might be time to start considering this as some sort of digital asset class. And since that time, Bitcoin has gone up over 150%. So what we know is that there is a real desire to actually get more involved in understanding more about Bitcoin, particularly from the big hedge funds. So you're looking at funds like Bridgewater and BlackRock, who traditionally had said, no, this stuff is a hoax and so forth. But Bitcoin has been going for 10 years now, and largely without issue. It is incredibly elegant in the way that it is designed technically. And so we are seeing the big hedge funds and so forth actually taking significant positions. And MicroStrategy, which is a company listed in the US, is actually holding more than $1 billion worth of Bitcoin, and that's actually driving up its share price. Now, what's the reason to stay away from Bitcoin? Well, it's unusual for sure in that we don't, it's not a traditional currency. One of the issues is transaction friction. If you've ever bought Bitcoin, you'll understand this. So all you get is a series of letters and numbers, and that is your entitlement to the Bitcoin. And so it's quite hard to buy it and to store it. You have to, if you want to store it securely, you have to take it and store it in a USB key. And there's some terrible stories of people who have lost their USB coins, USB with Bitcoin on it, and literally there's hundreds of millions of dollars. There's one poor fellow who he's got a USB. He knows it's got literally $268 million worth of Bitcoin on it, and his USB gives him 10 attempts at a password, and he is up now. He's done 8 incorrect attempts. He's got 2 more attempts to win $250 million of Bitcoin back. So, it's a strange asset class from that point of view. But PayPal announced that this year they are going to allow Bitcoin transactions on their platform. So we're starting to see Bitcoin really come into the mainstream. And decentralized finance is something that people should be aware of. So things like stable coins, which is sort of a cryptocurrency that is linked to some sort of existing currency. And so that takes these incredible fluctuations that you see with cryptocurrencies, particularly Bitcoin. It's not uncommon for Bitcoin to move 10% in a day. And also decentralized finance is lending. And so what's happening is we're seeing financial transactions which all occur just as computer code. So do have a look into decentralized finance, particularly if in the finance world, because it is coming for sure. And if we think about Bitcoin, one of the critical things that drives scarcity is this extraordinary way that it's been designed, which is in order to, there's only ever going to be 21 million Bitcoin. That's the way the software has been programmed. 21 million is the maximum. So right at the moment we have about 18 million Bitcoins have been mined. And the way you mine a Bitcoin is you use a computer to solve a problem. Now, in the early days of Bitcoin, that was a very simple problem. Whereas now that we've got 18 million Bitcoin out there, the problems are very, very complicated and require a lot of compute power to actually solve them. And that's not going to change because whilst it seems like, well, Bitcoin's been going for 10 years, we've got 18 million Bitcoin. So, we'll probably get the next 3 million Bitcoin in the next year or so because there's a lot of people mining it. Well, no, that's not the way that it works because, as I said, we're on a logarithmic curve with the level of complexity for mining these Bitcoin. And so it will take more than 120 years to actually mine the remaining 3 million Bitcoin. So that means that the dark side of Bitcoin, which is its energy usage, is really a problem that we need to address. So this is quite literal, which is that the amount of energy used by the Bitcoin platform over a year is the equivalent to the amount of energy used by Chile. So literally, Bitcoin is using as much energy as Chile, as an entire country. And the amount of carbon that is causing to be put into the atmosphere is the equivalent of New Zealand's carbon output in a year. So really some significant issues there from that environmental perspective. And so beyond Bitcoin is its technology. So it's based on what's called distributed ledger technology. And so what this could mean is the end of SWIFT, which is the way that banks around the world, they settle against each other. So banks have claims against each other every day, and so they settle those using SWIFT. And so what distributed ledgers means is that you can use cryptocurrency to actually enable these settlements without having to go out to a third-party platform. We've also seen central banks get very involved in digital currency, and China has their digital yuan. And so what that means in China, it's just in trial at this stage, but there's many millions of digital yuan out there, all being used now, and all of those transactions are recorded in one ledger. So if you think about the ability to monitor payment transactions, certainly digital currencies allows that. I mentioned the idea that the banks all settle with each other every day. So JP Morgan has the JP Morgan coin, which allows banks to settle with each other rather than using SWIFT. They can settle with each other using JP Morgan's own distributed ledger cryptocurrency. We've also got Ligon, which is where a number of the banks have joined together with IBM to create a distributed ledger for bank guarantees. And the banks have also joined together to do the DL stablecoin, a stablecoin which is pegged to the Australian dollar. And one of the interesting uses too is telecommunications companies. They also have to settle against each other globally because there's roaming and so forth. And so that is now, there's work being done to do those settlements by a cryptocurrency. And then finally, provenance. I think this is a really important area of distributed ledger technology. And at its simplest, there's a project where De Beers, the diamond business, has put all of its diamonds onto a distributed ledger. And so it is now able to track the provenance of its diamonds all the way through the sales process and out into the market and track them forever. And so you can do that now with grain, with a whole range of different things. So provenance is a very important area to look at.